Trends, support and resistance lines, and technical indicators look much different on a 1-minute chart than they do on a daily chart. For example, you may look at a 1-minute chart of Google and see that the stock price appears to be in a downtrend. If you switch your chart to a daily chart, however, you may see that the stock price has been in an uptrend for years. So which chart is right? Is Google in an uptrend, or is it in a downtrend? The answer is both. It is in a downtrend on the 1-minute chart, and it is in an uptrend on the daily chart. However, the trend of the longer-term chart is more established than the trend in the shorter-term chart. Successful stock and CFD traders tend to trade with a bias toward the long-term trend. They know that it will take a much larger market force to change the direction of a long-term trend than it will to change the direction of a short-term trend. Regardless of which time frame you trade from, short-term or long-term, you should always be aware of trends and levels of support and resistance across multiple time frames. This enables you to identify how strong various trends and levels of support and resistance are. You should consider analyzing at least 3 charts or time frames in your technical analysis. A trend chart, which is a longer-term chart, a signal chart, which is the chart you typically use in your trading, and a timing chart, which is a shorter-term chart. The trend chart is a longer-term chart that helps you identify the predominant trend you should be looking to trade with. If the stock price in the trend chart is trending upward, you should be looking to buy the stock or CFD. If the stock price in the trend chart is trending downward, you should be looking to sell the stock or CFD. You can choose whichever time frame you would like to use for your trend chart as long as it is a longer time frame than the time frame you use for the charts you normally trade from. For example, if you typically trade looking at a 1-hour chart, you should consider using a 1-day chart for your trend chart. If you typically trade looking at a 15-minute chart, you should consider using a 4-hour chart for your trend chart. The signal chart is whatever chart you currently use to make your trading decisions. It provides the trading signals that tell you when to look for buying and selling opportunities based on the trading methodology you use. The timing chart is a shorter-term chart that helps you more accurately identify when to enter and exit your trades. Let's take a look at what a high probability trade setup looks like using the multiple time frame trading approach. We will be looking at an example of Altria, formerly known as Philip Morris, using a weekly chart as the trend chart, a daily chart as the signal chart, and a 1-hour chart as the timing chart. First, you look at your trend chart to see what direction the stock price is trending. As you can see on the Altria weekly chart, the stock price has been in an uptrend for some time. It would have been foolish to fight this trend and try to sell Altria stocks or CFDs. Next, you look at the signal chart to identify an appropriate buy signal for Altria. In this example, we are looking at using the Commodity Channel Index, or CCI, to generate the trading signal. You can see on the daily Altria chart that the CCI gave a buy signal in February as it crossed from below -100 to above -100. Altria's price chart was also at a support level at that time. Lastly, you look at the timing chart to identify an appropriate time to buy Altria stocks or CFDs. You can see on the 1-hour Altria chart that the stock price was also at a level of short-term support at the time the trading signal was given on the signal chart. Seeing the trading signal generated on the signal chart line up so well with the trend on the trend chart and the price movement on the timing chart should give you increased confidence in the probability of your trade making you money. Using multiple time frames provides you with more accurate trading information. Better information leads to better trades lead to more profits and a happier you.